So in terms of the trends in the market that we're seeing, so expecting this year to see an increase in deal flow in the private equity space. Feel like a bit of a broken record on that one, but we do think deal flow will tick up this year. It does feel like there's quite a bit of fatigue from people sitting on the sidelines, so I think we will see a tick up in deal flow. We think that deal flow will be focused on the mid-market and particularly in growth equity. I think the larger cap deals will be difficult to get away unless we see further easing from the RBA, although given the rhetoric last week, I'm not holding my breath that there'll be more of that anytime soon. And finally, this theme that we've seen around private companies staying private for longer, we think that will continue. There was a report some of you may have seen yesterday from ASIC on the intersection of public and private markets. Talked about this trend of a lack of listings being more cyclical. I don't think that's the case. I do think it's a bit more structural. For those that are not aware, there's about half as many listed companies in the US as there were 30 years ago, right? So it was about 8,000 30 years ago, there's 4,000 today. So I think we'll continue to see that trend around private companies staying private for longer, but transacting through trade sales, other private equity firms buying out businesses, and adjacent businesses buying businesses too.